Why, hello, Bob. Shaswat, my favorite people. How you doing?
Oops. There we are. Good
Hi,
good
Tada. How are you?
afternoon, I guess, on your side. Morning here.
Oh yeah.
In India, it's
Good.
10:30 p.m. night. We just took our dinner.
Oh my God.
Oh,
Wow.
I
Let's
would love
go.
to show you the environment here. Please take a look. This is India, and can you see
Oh,
here? This is night.
oh my gosh, it's night. Yeah, it's nighttime. Wow.
This is ladies' school. Only girls studies here. 2,000 girls.
Wow. That's crazy. I didn't realize that it was so the time differences don't even connect. They don't click in my brain. That's amazing. Hello, Colleen. Hello, Mahir. Nice to see you in these Zooms as well.
Hi Jada, how you doing?
Doing good. Today has been productive and it's going to be more productive. I'm so excited. How are you guys? How are you, Colleen?
Absolutely. I'm great. I'm great. Thank you.
What's something exciting that you've been working on?
Oh my gosh. Quite a little of everything. And I'm sorry I have my video off, but I'm kind of like in the middle of something, but I'm like, I can't miss this. I have to jump in anyway. But I
I
am in
love
the
it.
middle of doing a whole number of different things, trying to get myself totally forward. How would I call it? Just trying to tackle a whole bunch of things in many different aspects, helping different teams. Let's just put it that way. Helping different
Okay.
teams coordinate themselves, and you know, it's fascinating learning the different people we have out there. You know, this community with sub two gators, and I'm still trying to work my way into owners club.
Oh, that's nice.
So, but yeah, you know, it's just so much to do, and I love everything about this.
That's amazing. Oh my gosh. Thank you for sharing that.
And I love what you're doing with your life. I mean, your new business. How is that going for you?
Thank you. Oh, sorry, my internet's off. You were saying something.
How's your new business going for you? I think that's super.
Thank you. It's amazing. I love all that we're doing. The lending is something that really fulfills me, I think, and it lights me up. And I'm just really excited because I get to work with more investors, and investors are my friends. It's all of you guys, and like everybody in sub two. Everybody's an investor and looking to do more deals and build their own wealth, and then build wealth so that they can help other people build wealth, and kind of like a domino effect. So more and more, that's kind of what Chai and I are growing, and it's been really fun. I have a whole whiteboard that I won't share yet, but with all my goals and kind of just plans with next steps. So things are good. Thank you.
Yeah, absolutely. I think it's fascinating.
Hello, hey guys, how are you?
Hey, speaking of Chai,
Okay, I'm gonna take one more minute while people are joining and get my coffee real quick, even though I'm like more of a chai guy.
it's noon.
I
Very
know.
true.
I woke up very late. I just wanted to catch up on my sleep. It's been crazy last week. I mean, vacations can be tiring because, because everybody wanted to go see the sunset at 4:45 in the morning. I was like, I don't want to do that. But I mean, when the kids heard it, they have to go. So here we are.
Sacrifice.
I know. All right, I
Very,
will be right back.
absolutely.
Grab
Uh,
some.
So I wanted to point out to the group that Bob actually reached out to me this week. I believe it was Thursday or yesterday. Um, and he sent me a deal. So really, I just wanted to take this opportunity to update you, Bob. Bob, we're waiting on the lender. So it was I believe, a mobile home park. Tell us about it.
Mine is a senior living for
Senior.
property. Yeah, 4 properties. It's kind of a business, and it's not my deal. It's somebody I connected with, and I've just been trying to help them connect the funds on the deal. And anyway, it's interesting. It's got a multiple of assumable debt on one of the properties. It's got a owner finance part of it. And anyway, it's I'm hoping I can get you guys on a Zoom call with the dean, and he's a good salesman, so he'll tell you his journey. It's enjoyable, but anyway, but that's what it is, and it's a fast track on learning and reaching out on senior living space. So it's
Very nice.
yeah. So anyway, he just felt I was on another site, and the word real estate came up, and I started chatting with the guy, and all of a sudden he went from a business development for senior living to taking over this establishment that he actually helped build and then
Oh, wow.
left. And then anyway, we'll catch up on that and hopefully have a Zoom on that.
All right. I look forward to it. Thank you for sending me that over. Who else has something exciting that they're working on? This is the point of this. I want I want us to be bringing deals. Hello, B. Nice to see you. Now, B is amazing. She is a TC for those that don't know her, but I'm pretty sure everybody here knows her because she joins every time. Um, but she's a fantastic TC that is has her own podcast, and she has just helped a ton of people, especially in the community. And I think that she is a fantastic resource if you want to, when you're closing deals and getting deals. She's somebody to go to make sure that, one, all the paperwork is being done correctly, and two, that you don't have to be the one that does the paperwork. That's her business. She's great at that. So go be. She also has kids and a baby, so I'm pretty sure that she must be quiet. But she is messaging in the chat, so thank you, V. You're great. Well, in the meantime, while we wait for Chai, does anybody have a deal that they want to see? I don't think so, because I know that me here and Shaswat are in India. Bob, we just talked about yours. Colleen, I know you're working on a couple people. B, you got a baby. Don Enrique, if you have anything, I'm here. Otherwise, if you don't have any deals, go ahead,
By
Colleen.
the way, I do have one, but he's not ready. So these different teams that we work with, when they have a deal, I want to bring them here. And
Mhm.
sometimes they're so busy in their own schedules, they're like, can you take it for me? So I
Okay.
will probably be sending it to Chai because they didn't get it to me. We had a Zoom last night and they're like, I don't know if I can get it in time. I said, that's okay. I can just email it to Chai later. It
Mhm.
is in Texas, so that should be helpful. But
Okay. Oh,
I'll probably have to email it to Chai sometime this week.
okay. Yeah. Yeah, that'd be
Thank
fantastic.
you.
Yeah, thank you. What's up, Edgar? Nice to see you. Hopefully it comes on. That's awesome. Great to see you guys.
Hello,
By the way,
I'm here. Hey, Edgar. B, how are you?
she's got a baby. She's that's sleeping on her. But we love
Oh,
B.
oh, cute. Okay. Okay, we have got a small group today. What do we have? Let's talk about you guys.
That's what I was saying. Edgar, do you have a deal?
Well,
Does not.
like I was saying to Jada, hi Chai.
Hey, Colleen.
I do work with teams, and I have someone that we were on a Zoom last night, and he didn't get the deal over to me. It is in Texas. I'll just wait for him to fill out all the information, and then I'll probably email it to you maybe sometime this afternoon or this week.
Okay.
But that's all I got for today.
Okay. What about you, Bob? You got a deal we can look at? Don, Edgar, anybody?
I did. We talked about, I'd sent some information on a senior living portfolio that we're working on funding. So anyway, that's something pretty complex to look at. So you guys can, hopefully we'll talk about that on another Zoom.
Okay. Sorry,
Well, in the
what?
meantime, let's make this into a Q&A. A couple weeks ago, Chai and I were on a road trip together coming back from Dallas, and I was asking him, if you were in my position, what would you be asking you right now? And he was giving me a ton of great just info and input. So I already took that question from you guys. So this is a great time to Q&A. This guy has built so many businesses and done a ton in real estate. Is anybody here? What is everybody's goals? I mean, what are you here for? Are you here to just be a
That is the
connector?
question.
Yeah, are you guys here to just be a connector? Are you here to learn how to flip a property, how to buy co-living, how to buy wraps, how to burr, how to be a lender? I want to see either you guys unmute and tell us or put it in the chat. Because if you're just here just to be here, I mean, that's nice. It's better than watching TV, but I think we should live lives more intentionally.
Yes. So the special, I mean, what's special about Jada, the reason I partnered with Jada is because she is extremely disciplined with, so she literally takes all the right advice, shops it around, make sure it is the right advice, and then implements it. Okay, it is, I mean, for me, that feels like a mountain to have that skill because I never did. And that is the one thing I struggle at, discipline. I mean, just because you guys, I mean, a lot of people see me that I've done so many things in real estate and whatnot, that doesn't make me disciplined at all. Just it's my passion driving it and my energy driving it. And as you age, passion and energy is going to drop. And if you don't have the discipline, or if it's not growing, your business is also going to decline. Okay, so discipline is what drives the business. So the sooner you realize that, unlike me, the better. Okay, so I'm struggling. I mean, everybody's struggling with something. I know that. Okay, I'm not saying everybody comes perfect. Everybody has some skeletons in the closet. Everybody has some things they would rather, I mean, they wish they had, but life is not like that, right? I mean, you have that's, I mean, if you had everything you thought you had, then there is no fun. So you have to play with the cards you're dealt, and you have to make the most out of your skill set and your likes and dislikes. Okay. So half the people, or rather 90% of the people that don't take any action. I mean, Jada isn't the only disciplined person on the planet. Again, I'm definitely not one of them, but there are so many disciplined people. Why are they not successful? Okay. The reason is they don't take any action. Okay. First of all, that's, I mean, discipline and action taking are two different skill sets altogether. Okay. I take action. I'm just not disciplined about it. Okay. I take action when my passion drives me to take action. And luckily for me, knock on the wood, my passion is still alive every day, every morning. I'm dialed in on all my businesses. Okay. But I do struggle with discipline big time. And I'm very vocal about it. I'm not ashamed, because if I lie to myself about my own weaknesses, then I'm never getting anywhere. Okay. So that's why I partner with people like Jada. I mean, my wife is my best discipline partner. Okay. So my wife, my other partner, Prakash, Jada, they are all disciplined people. I draw myself to people that are disciplined because I see something, oh my gosh, this person is amazing. So when you appreciate that, it's also good for your partnership, one. But uh, action taking and discipline, that's what today's call is about. So who wants to talk about their weakness today? Let's see. You need to be just like, I mean, you need to be open about your bad habits. Only then can you get good advice to, and again, advice is advice. You have to decide whether you take it or not. But people are gonna, at least, I mean, you're gonna give people a chance to talk about, I mean, or give you, there you go. Who do we have? iPhone 7.
I'm Brandy. Good morning, everyone.
Hey,
Or good
Brandy, how are you?
afternoon. Hey. So I think my biggest weakness is I'll take action, I'll call sellers, but when I get stumped on the next step or where it should go, my follow-up process is really slow. Just out of the fear of like what I think I just start overthinking of what I should do next. Who should I reach out to for help?
Well, I mean, so that problem is, I would say it's not that hard to solve because you just have to embrace the community around you.
Mm-hmm.
Okay. So just like you reached out to me and you got here on this call, you need to do that more often, or rather be consistent about, like, you need to come to this call every Saturday.
Correct. Mm-hmm.
Only when you will come to this call every Saturday, I will be able to do this call, because the more people show up, the more I'm, I mean, you guys are keeping me accountable, in short. So you need to come here and make it interesting for other people to think about you more and more. The more they think about you, the more they are going to help you, the more they are going to, more they are going to add value to your life and your problems. Okay. So your follow-up, let's talk about that. Okay. Your problem with follow-up. So I feel like your problem with follow-up can be easily solved if you find a closer. Okay. You need a closer in your life. And
Okay.
I mean, which market are you in? Let me ask you that.
So Ohio, DMV, and North Carolina.
Oh my gosh. Yeah. Ohio. Those are my favorite markets because you know what? Those markets in today's date still cash flow, unlike Texas, unlike obviously California or New York, but unlike Atlanta, unlike North Carolina, unlike any other southern states that were cash flowing only because the interest rates were lower, now they don't cash flow. I mean, you're lucky to break even in these markets because after the inflation, property prices went up, interest rates went up, property taxes went up, insurance went up. The rent, however, is literally, I mean, it's pulling teeth raising rents. Like, it's so hard. And the moment you raise rents, people are ready to move somewhere else. So, because there are so many properties out there, again, with this whole inflation and everything's become expensive, people are consolidating households. I mean, at least a few, uh, not like, sorry, hold on. There you are. So, not like what happened during COVID, but just, I mean, it's not affordable for a lot of people.
Mm-hmm.
So, because of that, there is, I mean, there is lot of inventory in the market for rentals. Apartments are struggling, so there is cheaper options out there. So it's almost impossible to increase rents. So, and one of the biggest reasons is everything's become expensive, but the salaries haven't caught up. Only when the salaries will catch up, it won't feel as expensive. Then
Mhm.
can they start paying higher rents? So that's why the Feds, with the interest rate hike, have literally put brakes on the economy. And it is, I mean, no matter who, I mean, if they try to lower the interest rate today, it's just going to go in the wrong direction, period. Because it's not sustainable. If they lower interest rates, then everybody is going to flood the market with like offers and buy more properties, because they know as soon as interest rates drop, the property prices are going to soar because of the demand. Because momentarily it will look like, okay, everything's awesome, everything's going to cash flow. So sorry. So with that being said, in today's date, buying properties is probably the smartest thing to do. Even if that means you have to make the ends meet, you need to buy today. Because, I mean, maybe not this year, maybe not next year, but the year after that, the interest rates are going to come down. Okay, the inflation will be within control, will be below 2%, and interest rates will be dropped, and the property prices will go up sustainably at that point. So if the reason they are in, like, they are under, I mean, they are in control right now is because of that interest rate. So today is your time to buy properties. But for you to buy today, you need to look into like the right areas. You have to, I mean, you are in the you are in Ohio and DMV markets. I think those are one of the best markets to look for properties. I'm personally I'm trying to build a large portfolio in Ohio.
Well, I have one under contract if you want to talk about it.
Yeah, no, for sure. So I'll connect you with my partner over there. His name is Eric Richards. I don't know if you've heard of him or already know him.
Mm-mm.
So Eric has an amazing wholesale operation, has no shortage of properties. There is always at least 100, I mean, not 100, maybe 50 properties available to pick for our portfolio. But again, we are building trust and we are building this new partnership. So we are not going aggressive with him. So we just, I mean, closed on first 3, and we could be closing on like 10 if we wanted to, but we are just taking it easy.
Okay.
One of the best strategies, in even though these markets are amazing and you can cash flow, I mean, if you want to see, I'm going to show you, because I know what people want to see. Sorry, that man. I mean, that man is a legend, by the way, the one you saw. Okay. So this is one of our properties with Eric. Okay. I'm going to blow this up a little. Okay. So I want to show you the purchase price. Right there, everybody is going to be like, are you serious? Can you buy properties for $40,000? Yes. In these markets, yes. So this is the property. Uh, So this is a bit rural. The one, let me see. Okay. Oh. Okay, there it is. So we are buying in this Wheeling. So this is the border of Ohio and West Virginia. So we are buying more in Wheeling. That's why we picked this property. Our partner lives like somewhere in this area. I can't remember exactly where. But he's trying to dominate the small markets in Ohio. Okay. So this property, as you can see, is right here. So there is a huge demand for people who want to buy properties, but they don't qualify for mortgage. So they will be our lease to buy tenants. Okay, lease to own. So if you can see here, the rent estimate is around 950, but we can push it to almost 1050. We are buying this property for $40,000. Okay. Who do you, I mean, what do you think it's going to cash flow? Of course it is, because we are buying it for with a 3% rule. Okay. Who here doesn't know a 1% rule? Have I talked about this enough before? And if you don't know 1% rule, I want to talk about it. But 1% rule is, I'm just going to show you here. So if the property is renting for $1,000 and the purchase price, this is per month, okay, by the way. Purchase price is $100,000. That means if I divide the rent per month by the property price, that's 1%. So this is 1%. What if my property rents for $1,000, or rather 1,050, and I'm buying it for 39,500? It's almost 3%. But we have to put about 2,250 in rehab. So my cost is not 40,000. It's actually 62,000. Even then, we are at 1.7% DSCR, so to say. When we do, so Jada and I are DSCR lenders, okay? For those of you who know anything about DSCR, you need to be at least 0.8 to 1% for you to get a loan for DSCR, okay? And that's based on your loan amount, not even the property value. Okay. So you can buy a lot more expensive property and still get a DSCR loan. So for properties like this, getting DSCR is so easy. Okay, because they are already cash flowing really, really high. But in our portfolio, we are going above and beyond. And not only are we doing everything that I just said, but we are actually taking it to the next level. And instead of just creating a long-term rental, we are creating a wraparound mortgage where the property might be worth 100,000 with this model, but we can actually sell it at a higher price when we sell it to a non-qualified mortgage owner, or rather non-QM buyer, like buyer who does not qualify today for a mortgage. We will be owner financing the property to them. So what that means is all these expenses that I have, property tax, insurance, maintenance, vacancy, property management, capital reserves, are paid by the borrower, because they are no longer the tenant, they are the borrower, because you are lending them money. You don't own the asset anymore. You own the note that you created for this borrower. Note is also called lien, also called a loan, also called a mortgage. So all these things are one and the same thing. So look at the total per year that I'm saving by yielding, I'm sorry, by I'm using this strategy. Okay. So my NOI jumps, well, again, NOI is net operating income. In simple words, it is income minus property expenses, not including mortgage payment. Income minus expenses. Those expenses do not include your mortgage payment. That's how NOI is calculated. NOI is calculated based on the assumption that you own this piece of property free and clear in cash. You do not have mortgage on it. In that scenario, how much you will net per year is what's called NOI. Okay, because people want to see, if I buy this property cash, how much am I going to make? So when they buy something with cash, if they are making more than the market interest rate, then they know, yes, I can put a mortgage on this, take all my money out, still cash flow, even if it's a small percentage, and then go on buying another property and one after that and one after that. Okay, so but if this cap rate were to show that it's 5% based on the cash investment, do you think they can get a mortgage on this at 7%? No, because they are going to bring that 2% out of pocket to pay that mortgage every month. But in this scenario, it's almost 10%. If I put 7% mortgage on it, out of that 10%, I pay 7% to the bank for giving me all my money back, and I still keep the 3% per month, just with the long-term rental strategy. Okay. And all my money will be out of it because my investment is less than 70% in this property. Okay. So, well, after financing cost, I may be putting another 2,300 out of pocket here in this particular scenario. But there are several properties where we don't have so much rehab, so our out of pocket is a lot less. Okay, so I want to show you that using a wraparound mortgage strategy by saving this much in expenses and charging the borrower about, where is it? Trying to see where, okay, there it is. This is my borrower's monthly payment based on 9.5% interest rate. Because remember, when you have a wraparound mortgage buyer, you can charge them more than market, I mean, interest rate higher than market. Because when you have a buyer that is buying from you on owner finance, that means they are not able to get a mortgage from the market at market interest rate. So they are a high risk borrower, but the only reason we are using, I mean, taking them is they are going to put down a decent like 10% down payment and pay us higher interest rate. Even if they default, we have safety. So in lot of cases, and I don't want to sound controversial, but in lot of cases, lot of these owner finance buyers happen to be a decorated tenant. Okay. What I mean by that is they are not as sophisticated as you think they are. They have cash and they have a dream. They want to own a piece of property. But at the end of the day, they cannot qualify for regular mortgage. That means there are some holes in their credit that you need to be aware of. There are some that are just not documented and they don't have a social security. So that's a completely different scenario. But the people that have social security, have bad credit and not able to get the mortgage are in some sort of situation. So if you are employing a strategy like wraparound mortgage, then you need to be ready to take this property back. Okay, so a lot of times, I mean, I've had to repossess like 3 or 4 properties in my career so far. I mean, it's not a huge rate. Even if they default once in a while, we will work with them, understand their problem, help them modify the loan. We do all kinds of things before just going out there and repossessing the property. So, but you have to be ready to do that. Okay. So one of the things, and I'm not talking to you as a lender, and I'm not telling you as an advice, but when you buy a property subject to and put a tenant in it, or rather owner finance buyer in it, you are essentially creating a wraparound mortgage, because there is a mortgage on the property and you are wrapping that mortgage with another mortgage for the buyer. You don't get rid of that underlying mortgage, you just create a new mortgage on top of that mortgage. Okay, so it's just like wrapping a gift. You have something, you wrap it to make it look like something else. Okay. Uh, or yeah, just create a different uh, uh, create a different asset with that, which is mortgage. So let me. So these buyers are going to pay you almost equivalent to, so because it's Ohio and because numbers are significantly different, their monthly payment comes out to be very similar to your rent numbers. The only thing that is different is the property expenses that you are no longer responsible for. Okay. So at the bottom, I have created a wraparound mortgage total monthly payment, which is 1,025, which is almost less than the market interest rate. Okay, so there will be no pushback from these buyers because their payment is within that affordability zone. And that's one of the biggest things you have to be careful about with wraparound mortgages. Maintain their monthly payment at a level where it's affordable, these people. So those are the numbers, and that's what we are going after in Ohio. So hope that helps, Brandy. Any questions on this one? I mean, if you are in that market and you have properties, I think you can do this all day long. I know people who own 60, 70, 100 plus properties that are wraps like this. So, oh, sorry, one thing I was trying, sorry, I lost my train of thought earlier. And I'm not saying this as a lender, that's not, and this is not an advice, but this is what some people do, is they will buy a property using a PML or a hard money or cash, whatever it is. Then go and get a DSCR loan, okay, from a lender that is not going to hold on to it in a private portfolio, rather sell it in the secondary market. And Jada and I know several lenders like that. Once there is a generic loan created, then we can go and create a wrap mortgage on top of it. But you're always running the risk of your due on sale clause getting called. So in that scenario, you have to step in and make sure your buyer understands it. If that happens, the buyer has to deed the property back to you, and you can put a new mortgage on it if you wanted to, or do some sort of workaround to avoid the due on sale. So wraparound mortgages are very effective in terms of cash flow, but there is a due on sale risk that comes with it if you want your cash out. As you grow your business and as you do this long enough, there will be banks that will step in and tell you, okay, we will give you a credit line where you can basically get a loan from us and wrap these properties officially. So there is no due on sale clause in those cases. So there are banks that are out there who will let you do this, but you have to graduate to that level for them to trust you with what you're doing. So That's why they brought me in as a partner or rather consultant in this business, because I know how to work with these banks. Okay, because one of my top businesses is hard money lending, and I work with banks who give me millions of dollars of credit lines to work with. And usually hard money lending is a business that is started by people that are uh, backed by large funds and whatnot, but I'm one of the very unique ones that is doing it based on my own personal uh, net worth. So I mean, these credit lines are large, but they are guaranteed by me personally. So, and the properties that we lend money on. But I personally, if something goes wrong, I'm personally responsible. So that's what you can do in this business, and especially in Ohio. So think about the cash flow. After refinance, you are still netting around 4,700 per year. How many properties do you need like this to retire?
Mm.
And this is nothing special. Like, look at this property. It's in the middle of nowhere. It's not, I mean, but there is a huge demand. I mean, you know it, right?
Mhm.
You work that market. So focus on something like this, also on a big lot. I mean, it's a great area. I mean, starting in my career, I wouldn't mind finding a property like this for myself, honestly. So, any other questions from anybody?
I just had a question. I'm working on one that may be a hybrid, and I just wanted to see what the underwriting kind of looked like with the numbers I had on it.
Sorry, say that again. I missed.
Oh, I'm sorry. I said I have a potential deal where it could be a hybrid deal, and I just wanted to kind of work out some numbers or an offer to the
Yeah.
seller.
Okay.
So it's a I like a duplex side by side.
Okay.
He has a loan balance on it of 363,000,
Okay.
and the interest rate is 4.15%.
Do you have an address we can look at?
Sure do. 1452 Wagar, Wagar Avenue. It's in Lakewood, Ohio.
Sorry, did you type it in somewhere, or you're just telling me?
I'm
Sorry.
sorry, I was just.
No, it's okay. You can tell me. I thought you were talking to yourself, typing. Tell me again.
Did you need me to repeat it, or do you want me to put it in the chat?
No, just repeat it. That's fine.
1452 Wagar, Wagar Avenue, and that's Lakewood, Ohio.
Okay, so because based on some numbers you just told us, it sounds like more. Okay, so this is, I mean, the market value looks like around 250 to 300. So what is the mortgage on this?
363.
Oh my gosh, why?
Because everything around it is, the comps around it are like 467.
Oh, they
I don't know
are.
why that's coming up to, I don't know why it's coming up.
I mean, these are the comps. This is that the right address though? 1452
Mm-hmm.
Vegar or Lakewood, Ohio.
Mm-hmm.
Okay, I mean, I'm
But
just
all my comps are like 449, 409, 425.
okay. There are some that are 453. I mean, this is all Zillow, and this looks like a good subdivision. So comps, I mean, there's
Those might be single families. You're seeing the ones that are my comps are pulling up are other like duplexes.
oh, okay.
And this one's a 6 bed.
Okay, so maybe it's pulling it up as one side only. No,
Maybe.
sorry, it's not. But okay, tell me the comps, like you have a comp.
Okay, so I have you want the address?
Yeah,
1482 Lauderdale, Lauderdale.
Okay, so, okay, there you are.
Mhm.
Okay, so that's because I think the fixed up properties are selling higher. Okay, that's reasonable. Okay, so now tell us 300 and how much?
363 is the balance on the mortgage
Okay,
at a rate of 4.15%.
363 at 4.6. Okay, what's your mortgage payment monthly?
Oh, now that he did not give me. Or did he?
Yeah, we can find that. That's fine. So let's see how much. Oh, so this is for sale. It hasn't sold, but okay. Again, if they listed it that much, might be. And this is a house. This is not even a duplex. Okay. Um, let's see.
I think he's renting one side for 1750 and the other side for 1875.
Yeah. Now what I'm gonna do is look for that area. All right. So 1800.
We got another comp too that's showing like it's a duplex, not too far.
I'm just trying to see what the rents are looking like.
It's okay.
Yeah, I think we can comfortably say they are anywhere between 16 to 1800. So let's call it 1700 rent. So your monthly rent is about 3400. So now we have to uh-oh. The taxes are around 6500. So you said 363 in Radha?
Mhm. Right. Oh, well, the loan, yeah.
At 4.25.
One, 1.5.
Insurance 2000 maybe. Okay, so your payment is 2472, but now how much is what is the seller finance component, the hybrid?
So if in order for it to be a hybrid and he keep the current mortgage in his name, I would need to sell it for around or buy it for around 450.
Okay, so around 8, I mean, 90, 85, 90.
Mm-hmm.
And what interest rate is that at?
He's willing to do it at 0%, but he wants a good chunk of it so he can invest in somewhere else.
Okay, so how much you think?
He threw out the number 80,000.
Oh, so he wants all of it. Like, what are we gonna do? $5,000 lien?
But
Uh,
I didn't, but that's what he threw out. I didn't,
yeah, so with this, Your cash flow is about $1,000 before vacancy maintenance. Okay. So you're looking at losing for vacancy and maintenance. I tell people around 15% of the total. So just $500 to $600 will be gone from that $1,000 cash flow. So you're talking about a $400 cash flow. So if you do 400 times 12, that's 4,800. Now divide that by 80,000. That's 6% return on your money. At 40,000, it will be 12% return on your money. But that's going to reduce your cash flow further because you have to also make payment towards your seller finance lien on top of this.
Mm-hmm.
But with all that, if you found an owner finance buyer, things change dramatically because you're like we saw earlier, your expenses go down to zero. So if you what you need to do is talk to some brokers in that area, and if they will find you a lease to own buyer for that area who would want to live in one unit and then rent the other unit.
So his tenants want to stay because they've been there good tenants.
Yeah, so ask them if they are if they would be buying that property from you. If they you change them from regular tenants to lease to own,
Mm-hmm.
it can be made, it can cash flow in that scenario.
Okay.
Okay,
Thank you so much.
awesome, of course. Anybody else have any properties or questions we can discuss today? Hey, Kiran, how are you, man? Long time. Armando, Elena, oh my gosh. All our original
Chad,
OGs.
Chad, I got a question.
Yeah, what's up?
On subject two, the
Okay.
hazard insurance. How do we assure ourselves that in the event of a fire or something that, as a wrap investor, how do we get compensated without triggering the due on sale clause with the underlying lender?
So when you have a subject to deal, when you buy it, you need to make sure when you get an insurance, the original seller's name has to be either in the primary spot or additional insured. Because when that copy is sent to the mortgage company, they will see who is on who is on that insurance, and they want to make sure the person they lent money to is the same person on the insurance. Because if something goes wrong, the insurance will not pay for the damages if that person is not insured.
Okay.
Okay.
Let me see if I understand. So the insurance policy will show uh, uh, the owner as the insured party in the event of a compensation. The check gets made payable to the previous owner on our wrap loan versus the underlying mortgage.
Sorry, say that again. The underlying.
Yeah, okay, yeah. There's a mortgage on the property. We do a wrap, so we get the owner to carry a wrap loan. So when we
Okay.
insure it, do we insure the wrap loan only, making the holder of the wrap covered with our insurance policy?
No, so
This way,
hold on. Sorry, you are never insuring a loan. You are always insuring the property.
yes, but in the event that there's a damage on the property and a claim has to be remitted, uh,
Oh,
wouldn't the
as a
funds?
lender. Oh, yes, yes, I understand your question now. Okay.
Thank you.
As a lender, okay, if you are, so there is a seller who sold the property to you. Okay. Seller has the mortgage in their name. Okay. The mortgage is in seller's name, original mortgage. Okay. So when you get an insurance, so now you are a buyer and now you are selling it to another buyer. Okay, so seller, you and the buyer. Okay, so there is three entities now. So that buyer is going to get the insurance. Your company is the lien holder for that buyer. That goes on the mortgage, I'm sorry, that goes on your insurance or their insurance as a loss pay or a mortgagee. That is you. Does that make sense, Don?
Well, okay, the lien holder, the same should be a entity of mine. Is that my understanding?
Let me put it in on this spreadsheet so you understand easier. Okay, so seller. Hey, let me take this column. So sorry, one sec. Hey, sorry about that. Okay. Okay, sorry. Don. So also, okay. So there is a seller who has a mortgage. Okay. So that mortgage holder is mortgagee one. That's how it works. Okay. You are buyer one for the seller you are buying. And then you become the second mortgage holder or wrap mortgage holder for the end buyer. So when they get an insurance, so wrap buyer gets an insurance. On that, primary insured is wrap buyer. Additional insured is seller. Mortgagee one is underlying lien holder. And mortgagee two is you. That's how an insurance is structured. So when something goes wrong with the house and they file for insurance, the check comes to them with the seller's name on it that you can endorse on behalf of the seller, because when you bought this house subject to, you did get a power of attorney from the seller. Okay. And authorization to basically sign on their behalf the checks. So you can sign on seller's behalf that check. So you are aware that there is funds coming in. So you won't sign anything until things are fixed in the house. So they cannot cash those checks. Also, that checks, I mean, you sign on behalf of the seller, but there is also your name on it because you are a mortgagee. And then the fourth person is underlying lien holder. So once you sign it, seller signs it. I'm sorry, when the buyer signs it, you sign on seller's behalf, you sign on your own behalf, you send it to the lien holder, they sign it, and then the check can be cashed. Sometimes insurance companies will not allow two mortgagees on the insurance policy. So instead of mortgagee 2, you have to add yourself as additional insured. So there will be 3, I mean, primary insured and 2 additional insured, and then mortgagee 1. That's how it goes. That's how everybody is covered.
Okay,
Does that
excellent. Yes, final question.
Yeah.
The power of attorney, I would think that a specific power of attorney versus a general power of attorney should be obtained?
Specific power of attorney just for that property.
Yes, so
Yeah,
it's a
otherwise,
specific power of attorney, huh? Okay,
it's just limited to that particular property.
right, okay. Thank you, sir.
Of course. All right. So we are coming up to an hour, and if there are no other questions, I would like to end the call early. But you know the drill. Oh, sorry. Let me. Always gets confusing. Actually, who says more? Yeah, G. Well, you are correct. Mortgagee and mortgager. Yeah, those are a little. But then it's called a mortgagee clause. That's why we are using the word mortgagee. Great question though. Okay, have you? Okay, in subtotal. Don't get dinged for predatory lending. Yeah, predatory lending. Okay, George left, but I'll answer that anyways. Predatory lending is considered when you exceed usury laws, I mean, usury limits of the interest rate. In Texas, it's 18%. Okay. So there are certain ways around it. There are certain things you can do to charge more interest. But again, if anybody has that specific issue going on, we can talk about it. Otherwise, it's a much lengthier topic to just answer in one sentence. But yeah, with that being said, join our Facebook group, add as many people as you can, and share that there is a free Zoom happening every Saturday at noon Central. And follow me and Jada on Instagram. We are always posting good things and connect us. Send me a DM. If anybody wants to connect me with me, send me a DM on Instagram. That's the best way to reach me. I respond to every one of those DMs. All right. Thank you guys for attending, and we will see you next Saturday.
Thank you, Shai.
Thank you.